That's right, everyone. I know we were all highly anticipating this earnings right here. As GameStop reports earnings just not too long ago, we're going to take a look at them. As you see, the stock is going literally every which way. At one point it was up 6%, now up 1%. At one point it was down off the initial reaction. There's a lot going on here, and this is going to be a volatile trading session after hours. And tomorrow, probably very volatile as well. So just keep that in mind. There's a lot of things to consider with this stock. Let's, overall though, take a look at this. This is what we're excited about. So they posted a GAAP EPS line, non-GAAP EPS of $1.34, misses by 8 cents, and a GAAP EPS of $1.18 is a miss by 29 cents. So overall, definitely a miss on profitability compared to where they were supposed to be. And from a revenue perspective, $2.12 billion, down 3% year over year, is a miss by $110 million. I mean, there are a few things I can say that are that exciting about this earnings. I mean, it's a pretty bad earnings. It's a pretty bad earnings report there. The revenue miss could have been by more, certainly, but still by missing by 5%, it's pretty significant, frankly, a 5% miss there. It needs to be noted. There's no doubt about it. And a decline year over year, I find quite insane. And I know some people may argue to the contrary, but I did just want to put this statement out there. If you look at video game sales for the entire year of last year, and definitely in particular the last 3 to 4 months, we have seen record levels of money spent in this sector, record levels of revenue for all of video gaming. Yet GameStop, in the epitome of just a perfect market environment, posted a decline in revenue year over year. Where they see a benefit here is comp sales growth of 6.5% compared to 4.7%. Now, the issue that is you see comp sales increased, but revenue declined by 3% still. In my opinion, this is a company that was poised for really a gimme of a year. I mean, this was a gimme. Any retailer will state that out. And you can see the big wigs, the ones making tens of billions of dollars, increasing by high single-digit levels, while GameStop here lagging behind, only making $2 billion, declining year over year. I mean, come on now. That's what I'm thinking about. But as far as outlook, during 2021, the company will focus on its transformation while also capitalizing on emerging console cycle. I mean, come on now. You had a new console, which have seen sales just take off, and we've still seen a decline. The company is continuing to suspend guidance, obviously, as a result of prolonged pandemic-related store closures, which began in March. Not necessarily relevant for them anymore, but they'll still say it is, which will impact the calculation of comp sales stores this year. The company does not currently intend to report this metric in fiscal year 2021. No comp sales numbers, which I guess makes sense because some will be extremely skewed, extremely high. I get that aspect of it. Yeah, I do get that aspect. The company believes total net sales is more appropriate a metric, which I believe so too. As the company continues to reposition during 2021, it will continue to evaluate the metrics that it believes the most effectively inform investors of the company's performance, which is not that exciting of a performance, not that good. And obviously they make a point here that GameStop stock has gone up 11 times since the last earnings report. 11 times. Woo! A little bit more detail here. Obviously, we saw comp sales increase, all because of global e-commerce. Look at that. Global e-commerce sales up 175% year over year is pretty significant. Now, it does go to show you that this is a company that's got a lot of issues here when it comes to the in-store segment. It's going to be entirely digital, this company, in the future. And that comes with expenses. I think you need to mention that. That's going to be an expensive process here. They have a lot of properties they have to get rid of. We'll see what that process looks like, obviously. Gross margin was 21.1% of sales versus a 25.1% consensus. So, again, didn't even hit on the margin here. I mean, it's just, I don't know. It's hard to say. Off to a strong start in the current quarter with February comp sales stores up 23%, supposedly. Don't know necessarily if we're talking about truthfulness here. But, if they are, that's pretty good for them. Again, comp sales stores, they said, are not going to be that important to talk about. But here they are talking about them. I don't know. GameStop has appointed Jenna Owens as the Chief Operating Officer. Owens spent a majority of the past decade in roles at Amazon and Google. Definitely a good insight to bring on. Obviously, you're going to focus on the website portion of this, so GameStop obviously makes sense. It's continuing to position its brick-and-mortar footprint and digital assets to capitalize on emerging console cycle, which they're not doing a great job of. During 2021, GameStop plans to focus on its transition while also capitalizing the emerging console cycle, navigating the pandemic. No formal guidance issued, as we saw. Let's just look. Stock still holding on, up 0.6 now. Look at this press release because we want to look at it. Yeah, we want to look at it. So net sales, not bad. Decreased year over year. Not a good sign. I don't know. Again, I don't know how else to say this. There is everything going for this company in this quarter. Every single possible benefit they could find. I mean, we're talking about a stimulus check in this quarter. We're talking about new consoles. We're talking about the new suite of games. We're talking about overall video game sales and accessories and hardware. Every single bit of the segment increasing, and the company declined year over year in sales. I don't know. Obviously, a reduction in stores there. Globally, commerce sales pretty nice. Represented 34% of net sales, which is definitely a big sign there that in-store just not going to exist. It's just going to be an expensive process there to handle what comes with all these store closures. I don't know. I'm the most tired man of all time. SG&A expenses were $419 million, which is a decline actually of 18% from the year prior. So that's pretty nice. Cost optimization initiatives by them, taking care of that. Pretty nice. Net income line was positive. You gotta like that. $80 million. Not what you'd look for necessarily. A company that's got $2 billion in revenue, only $80 million in net income. Pretty disappointing. But overall, not that bad. Not that bad. I mean, it's quite an increase year over year if you look at that aspect too. Yeah. I mean, it's an increase, I guess. I don't know. There were a lot less shares last quarter. Never mind. Not that much of a change. We're talking about a difference between adjusted of 90.7 and 83.8. Not a massive increase, actually, but it is an increase. We got to be honest here. For the full year, comp sales stores declined 9.5. You should not see that. Well, I mean, I'm just being 100% honest. Look at any other retailer and what those comp sales numbers did this past year. We're talking about 20% increases in most cases, and they're declining in it. I just don't get it. Net sales came in at $5 billion compared to 6.46 of the year prior. That's a massive decrease there. It is a massive decrease. Global sales grew 191%, which is big, but the fact is they haven't had a huge customer base on .com to begin with. just not that exciting for this company and what they're able to do. Net loss for the full year came in at $215 million, compared to obviously the year prior of $138 million. Not exciting stuff. You know, what can I say? Yeah, I mean that's what I got. The company is in an area of renovation. You know, this is a company that is trying to transition into a strictly online company. We'll see what those efforts look like. If you're in the stock, we'll look at the balance sheet, see what they have to offer. Overall, a nice year-over-year comparison. We like seeing that. Total current assets coming in at $1.5 billion, compared to $1.6 billion the year prior. Just a little bit spent in terms of cash and cash equivalents. Nothing crazy there. Total assets in general, $2.4 billion versus $2.8. Total current liabilities coming in at $1.3 billion versus $1.2. So obviously a growth there. You don't like to see it, especially when you see assets decline. And total liabilities in general, $2 billion compared to $2.2 billion. That is positive there. You know, they overall did see a decrease in terms of some long-term debt. Good to see him pay that down a little bit. Still, stockholder equity fell, sitting at $436 million versus $611 million of the year prior. Could have fallen a lot worse, but not a balance sheet in a position that I like to see. We're talking about $2.4 billion here. That's it. Total on the balance sheet. Not an exciting balance sheet. Look, there's a lot of things that need to be said. The company's trading in a market cap of $12.68 billion, bringing in $5 billion for the year. Doesn't seem that bad, but to me it does seem bad when you're going to think about the fact that this company is not a company that's in growth mode. It's a company in transition mode. And for something like that, I want you to look at GE maybe. It's a fair comparison. The company went through a massive, massive transition, still undergoing. And look where the stock's gone in that time. It hasn't increased by 111%. Or sorry, it hasn't gone 11 times what it was before. We're talking about thousands of percentage points here with GameStop. Well, GE didn't get the same treatment. So look for a decrease here in GameStop stock. Frankly, if it's a company declining sales year over year in the biggest year of retail ever, the biggest year of video games ever, then this is not a stock I want to be in. Let's just be honest. No matter the valuation, I still don't want to be in it. Now down 5% after hours. I mean, you know, I said I told you so, and I did. Tomorrow, I don't know what's going to be like. This stock's just trading so irrationally. I don't know what to expect, but that's all I got for you today. Really hope you enjoyed this and have a great day.